All right, let's jump into it. Where we at? 9 past 11, 12th of uh, November. So getting a third of the way through the month now, and obviously just sort of start off with DXY here because this is really just the one. As I say, it feels like I say this almost every morning. This is the one that's driving it, and it really is. It just absolutely hammered through yesterday. Pretty quiet through Asia, to be honest, and that. It's a, like a little gap in the morning and that, and it's a little bit of stuffing around. It's almost 30 minutes. Let's chuck on so a little bit more usable. The 1 hour, you can see a little bit of gap up, close the gap, stuffed around. Didn't really do much. Didn't really give away too much in that. Obviously, underneath is sort of falling resistance here. 6 p.m. last night, though, it just went bang and took off. As you can see, it was really just a one-way trade all the way through up through here. Coming up into this higher time frame resistance area that we have marked out. So, it's no shocker that, like we always sort of say, like this is an area we've identified, and that's where market has decided to at least attempt to sort of sell it down a little bit. And that, by no means is this sort of like saying this is a top, because really, as you can see, this is the election retest, bang. Quite a deep retest, like 61%. But of course, this is the whole sort of way that these things move. As I said, you say you're up, you find resistance, you're back, up, back, find support. This is the leg that you need to see because this is the leg, as I always say, you're either going to get your double top, which looks like we potentially may have got come on the Friday session. Um, but of course, Monday, bang, pushes through and comes up to the top over here. So the cycle starts again. So now you've moved up, you found resistance. We'll be looking for a pullback to this area here. Most likely a good sort of support area is going to be a retest of these previous resistance. So this will now be the support. We look for this to hold, and then we look for that third leg through here again. This one will target initially those previous highs, the highs that we've sort of seen overnight, and then potentially to move forward. We had that sort of measured move price target up in the 106 areas based off that little flag that we had sort of come through. So it's very messy just there. But get back down onto the 4 hour. That little sort of potential sort of pullback flag that we saw sort of come through here gives us a price target still up around 106, 20 odd through this area here. Price target there. So as I said, look, we saw it sort of like cool off a little bit into the end of the session. It's a little bit overboard. This is on the 4 hour, flattening out a little bit here. So look, I think there's definitely room for this to have a little bit of a sort of pullback. I mean, look, this thing is very, very just bang, fanboy USD in charge at the moment. Metals have just been demolished on this. Gold down 100 and what was it about 160 bucks or so from the highs. So, and it just got absolutely walloped. Once it fell out of that little box that we sort of did over the weekend, it just dropped again. Same little bit of a drop down. Then not much through Asia, but then come Europe and US. Oof, it got absolutely decimated. I'm just having a look on another chart now. I think we had a sort of another support at 57, 26.57, and it just went, it got slammed after that. So I wasn't short on this, unfortunately, and so that was a very big profitable move to the downside for the people that were shorting that one. So anyway, we'll get to gold in a moment. So with DXY, what we're looking for potentially sort of through this session, obviously a break of the highs is going to be the one that where we say, okay, yep, boom, and next leg. Because the same sort of structure that we sort of see as I showed a second ago on the dailies, you're still seeing this through here. So you could be seeing a smaller version, I'll do it with this one, where we sort of moved up, found resistance, push back, find support, previous highs down below. So it could come to this level here. Then you're tackling this level here, the highs, and that could give you, you move on here. You could also see a move here, back down to here, then tackle the highs, and then move on here. So in either event in that, we're obviously seeing a little bit of a cooling off. Hit the resistance area, a little bit of a cooling off. Question is, how deep does this come? It is overbought. It is turnaround Tuesday. We have seen these other sort of markets get absolutely hammered. So there could be a little bit of a rebalancing because, I mean, if you're a gold bull, I mean, you're buying it at a mega discount. from 2 weeks ago. We were at the highs. Remember, gold has been such a smash down from the highs. 2 weeks on the 31st, I think, is when we sort of saw the highs. Maybe the 30th. I'll have a look in a sec. You're buying that at a big discount, 10% discount also. Oh, not 10% actually, maybe 5 or 6% discount from the highs. So you know what I mean. There's a possibility where people go, hey, look, you know what? This is an idea to sort of give these things a little bit of a go now because they're so low, which obviously gives DXY a little bit of a time to sort of cool off. The flows of capital come out of the US dollar because remember, this has just been rip, 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 rip flows come out of US dollar, not massively. I'm not saying we're coming back down here in this move, but the flows come out of here, go back into these other markets, the euro, Aussie, the pound, the metals. This gives DXY a little bit of a cool off. People go, yep, look, that's it. That's enough for me for the gold. Gets it back up to the level where, maybe people want to do another round of selling. And the flows come back out of the metals and euros and these crosses back into DXY, and that gives you this leg here. It's all about, really, in my opinion, just sort of following where the flows are going. Like the capital is just it's got to be somewhere. That's the thing. The money has to be somewhere, and the job that we do is basically identifying where that money is and where that flow is, and given a lot of series of factors and bits of data and current news, where people are most likely to be placing that. That's the whole game. That's what it comes down to. Because as I said, the money can't just evaporate. If it's not into commodities, if it's not into equities, these kind of things, it's going to come back into the US dollar and your safe havens, because these things that typically are relatively stable. I mean, obviously, on a shorter time frame, these things can be very like all over the place. But all in all, if you want to sort of just park your money, park your capital, that's traditionally the areas. And this is why sort of gold has always been renowned as sort of like a bit of a safe haven, just because it has been something that's relatively stable. I mean, we're seeing other things like Bitcoin go through the roof at the moment. But, I mean, look, gold has a bad week in that and it's down 4 or 5%. We're talking if you've got sort of serious money, we're talking hundreds of millions, $1 billion kind of thing. Something that only moves 5%, well, that's a little bit more attractive than something that could move sort of 20 or 30 or 40% in a bad month. So that's why people call them the safe havens, and that's where they'll sort of park their capital in a bit of time of uncertainty. The thing with gold at the moment is that one, the uncertainty's been taken away. Like the uncertainty was the election. Like it's not the only driver, but the most recent sort of part of the news, and probably what helped sort of gold on that last leg up, was the uncertainty of whether we were going to get a easy result and an easy transfer with the US elections. That seems to pretty much have happened. Obviously, we got pretty much a whitewash with it, and we got uh, the Democrats have sort of said, yes, look, we're happy to sort of just hand it over peacefully, whatever. So yeah, look, there's a lot of sort of reason for sort of gold to be coming down a little bit. It's, as I said, it's not the only driver. So it's not like, okay, well, we're only buying it because of the election. The election's over now, so let's not hold gold anymore. Look, there's other factors at play, obviously. But while US dollar is in such a big charge mode, they have reverted back to their typical relationship, which is one of inverse. And that was the thing that we were trying to identify, who was going to crack first, because they were both moving in sync. They were both moving up, they were both moving down. One of them had to be lying, and it turned out that gold was the one that was lying, because as US dollar continues to move higher, finally we saw the crack appear in gold and in silver, and metals in general, and it has sort of come off the boil a little bit. So that's a bit of the sort of overall view. What we're kind of looking for, top side above 105.70, excuse me, would be your confirmation that you're moving up. Again, the price target 106.20, which is still a decent move, because I don't think this move is quite done yet. Uh, we could see a bit more of a sort of sustained, not sustained, a little bit more of a sort of pullback down to these areas. As I said, the areas that I'd be looking for would potentially be this band through here, 105.20. If they're really super bullish, 105.40. If we get a bounce from 105.40, well, obviously shallower pullback, more likely you're going to move a bit quicker and you're probably going to move a bit higher. So you're going to see a faster move there. I don't know what's going on with the computer here. Everything seems to be sort of chugging along. Um, you're going to have to have a look at this quickly. All right, I'm back. Yeah, it seems to have fixed. I think the fan stopped for a second there, so it was probably about to shut off because it was overheating. So where we are, 11:20 and that. So anyway, look, yeah. So if shallow will pull back and that obviously just means they're not giving you a chance to go off. They're very hungry for it, and they're just going to rip it straight up here again. 40 minutes. We've got 12 o'clock. That's when DXY comes online. We're seeing some pretty sort of wild kind of moves as we're sort of just coming into this moment here. So yeah, may have to sort of pause this in a moment just and manage some positions. Um, Downside, I don't think there's much downside here at the moment. I think really you're just looking for the pullback. So the three areas are 105.40, 105.20, and if we do happen to come below that, I think this area down here of the retest of this sort of falling resistance. They're the three areas. Let me just do this. Yeah, yeah, there. They're the three moves that I think we may be sort of seeing before we see another sort of push and leg up through here. All right, flip across. Let's talk about gold. Wow. As I said, this was the move yesterday. I said, look, underneath 80, look, this is where we'd be targeting. And obviously, look, came down here and just really, this is on a 4 hour, just cut through there. It's sort of, you can see there, as I sort of said, look, market did think about it for a moment. Actually had this little spike up here, and then just this was the key sort of thing for that next leg down. That's sort of like where it's dropped down, fires straight back up. So think about it. So the people who are in this area here, they short it. It comes down out under the bottom of this little range. That's fine. Yep, cool. Now we've broken out of the range. Stops to a nice textbook level. Comes up here, clips them, grabs that extra liquidity, people going hot and wait, it's a fake out, and then uses that for the stops underneath here, and then just goes boom, just for that extra added sort of liquidity. And that's the whole sort of thing with these things. It's sort of like, it's just where can they add liquidity to their moves? And this is why you sort of get things come up and sort of consolidate around areas. Um, so as we're sort of seeing it at the moment, look, it has been absolutely pulverized. So that was last week. So where we at? So we are currently 6% off the highs, $178. In when was this? This was yeah, 31st. So this month, let's have a look at this. Oh, this on a monthly will look interesting. 1 month. Make it a bit clearer for us. Oof. So in 10 days, this is like sort of taking care of the whole last month. But look at this chart though. You know what I mean? Resistance, resistance, resistance. This is a monthly, of course, but all the way up over here. This has to have a cool off at some stage. But the thing is, with these things, when they cool off, generally, I mean, look, this could really do a massive engulfing. This is monthly. It's overbought. It's rolling over. It's definitely due for some cooling off. This could come down to 2,500. Yeah, if we see a big sort of massive engulfing, like if we take out last month's lows at 2,600, this could really pick up some steam. Though generally with these things, when they move fast, like the same sort of thing, like when a candle opens on a sort of smaller time frame, if they move fast quickly, generally you'll see it sort of go boo, bounce back up, and then the second temp will be sort of coming through and it'll come down further. So I think definitely downside is due. And if we just look through this last sort of move from these lows down here, as we chases November 22. Wow, that's your big pullback here. I don't know about this actually. Let's look at this. Sky blue thing. Cool. So yeah, as I said, look, 23% pullback of this monthly move. Remember, this is a very high time frame. Not nothing that something that we normally trade. Um, you see how many fibs we've tried to sort of use through this. Well, tried to use, have used. If you come back down to the 23%, this is really still 25.12. So look, I don't think we're going to be going down here in one go. I would expect probably some sort of bounce at some stage, maybe around 27 or so. But then I'd say whatever low we put in now is going to be your sort of your ledge, your sort of line in the sand for this to really sort of move to the downside. So I'd be cautious to sort of, if we get back onto a realistic time frame that we can trade here, I'd be cautious to sort of, I've said this a few times though, cautious to sort of sell it at this point because you know what I mean. The time to sell it was here, 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 all these kind of things. By sell it, I mean short it. Um, the fact that we'll sort of come all the way down here, and these are quite, I mean, look at how fast this move came down here. This may not have been a singular candle, but the move is still very similar. And see how the snapback is fairly sharp. So I wouldn't be surprised. Maybe some stuffing around, eventually come back up, test this falling resistance over here. I thought we could have got up over here just to get this down a little bit further. Of course, a lot of my price targets seem to be at the moment just dropping a couple of dollars short. So I'm going to work that into the plans a little bit. That everywhere I seem to go, okay, this is the price target. Missed it just a little bit. So close enough, good enough is the attitude that I'm going to sort of take with this at the moment. But if we drag this out, see if this lines up with anything here, potentially. I'll leave this one on here. But yeah, so I wouldn't be surprised if we do over the next week or so. We got CPI coming out as well. See some sort of move up through this area, even if this were to be the sort of structure, to sort of get this to sort of come up around to this sort of like 26.75 area, maybe undo this big move down here, and then sort of like continue down, moving further. If this thing drops out the bottom here, well, obviously this is an area where we've had some previous buying. I would suggest that potentially we see just a quick move down 50 bucks again, down to these levels at 25.50. But when you look at it like this, 2500 is really down over here, which obviously is still a fair way away, and there's a lot of littler levels, but we never got that retest at 25.30. Remember, this was the big breakout that we had. As you can see, broke out, came back, and didn't really even get close. This one was another 15 bucks off, and just took off and went. So, look, there's a lot of downside for this here. I was actually thinking this one other thing that I was just. I know these charts are incredibly messy. Actually, maybe I'll put on this one. Alright, where we at? This last sort of push through here. So if we sort of call this your big area, 2600. If we're looking for a 3 drive, could this still have another top side here? That's a big call to sort of think that potentially you could get a move here. I think more in the short term, if we look at this little channel being broken is what was our key for the rejection after that bounce. As you can see through here, this is a break, retest, tested the lows, broke down. Now this is the thing. We're in this middle leg here. So you've got 2 legs that are guaranteed through here. One is some sort of reprieve. It doesn't have to come from here. This could still come down here. But you're going to have a bounce back up at some stage. We're going to target where those supports were from last night. These levels over here at 26.40, 45, whatever. Then you're going to have to sort of target these lows. If this is the low, then you're going to be targeting 26.13. And that'll be the leg where you sort of determine, is this the bottom, double bottom, lower low, continuation, or higher low, reversal. So I think, as I said, with DXY potentially sort of cooling a little bit through here, I think we could see a little bit of a rebalancing back up at least to the 40s, which is a 20-buck move after such a big sort of sell down. This is on the 4-hour here. This has really just been a one-way trade. Obviously, it was over the weekend, but if we actually just have a quick look at that. If we get rid of this and drag this fib from here down to here, it's down. So a 38% comes in pretty much in line with 26.48, those previous lows, and then maybe a bit of a move back down to retest for a continuation underneath 26.30. But yeah, otherwise, I mean, there's also the chance that we just really stuff around the bottom down here. As you can see, as this came down, it didn't V-shape back up. I think above, above 26.30, you might sort of see a little bit of a movement on it all. So a quick look at a few other charts. So you could see a little bit of move up there, but again, I think these are very much just going to be rallies that are just going to get sold into to sort of retarget this level down here for 26.12 for then a move back down, potentially a bit lower. All right, let's flip across. Got silver. Silver also got smashed through last night. It held up a little bit better than gold initially. It was actually sort of gold was starting to break down and silver was trying to move back up. But you can see where it's really sort of starting to confirm. This line here is your break line. Every time it's hit this 1, 2, 3, 4, and obviously where it started from 5 up here, that's your level in which the market goes, yep, give me a shot there, I'm going to sell it. Bang, clipped it here, straight away, bang, clipped it here, bang, straight away, and then boof, whitewash down to the bottom side there. So look, there's a little bit of stuff. So I've just had a little bit of Aussie data come out. Let's have a quick look. This is confidence. Yeah, very high. Aussie has not responded at all. It's only a low rated one, but yeah, again, these are little pieces of the puzzle that we put in there. Aussie's actually sort of sold back down on that news. Let's have a quick look. Just flip across to Aussie quickly, and yeah, I'm selling down on that news. Really too much. Sorry, mumbling away here. Just thinking to myself, there's not really too much to sort of take away from that. I'll get to Aussie in a moment. Okay, so silver. So yeah, so what we sort of take away from silver is, look, this was the move that we saw after that sort of sell down from whenever it was after the election. Move back up here and clip and then push back down. This is what we've seen. Support, resistance, resistance, underside of where those support areas were, where they were buying it, now they became sellers. So you had your confluence through this area here. It's then tried to rally, and eventually gone, well, okay, fine, we're not rallying. Boom, let's go down a little bit further. If we drag this down here a little bit, doesn't really give you too much to work off here. But to me, this is the kind of line you want to see break. I'm going to put a little alert on this one. So yeah, it's definitely sort of confirming this line through here. So as to sort of how far this comes back down, as I said yesterday, that's sort of like a break of this level down here. This looks very much like it could almost sort of bear flag down that last leg. And move down to that support area. So if we go back over to these previous areas, these are the previous areas where we had sellers. Sellers. They became the buyers. Didn't quite get back to this level down over here previously, but just at a quick eyeball glance, that could give you pretty much a little bear flag continuation to the downside here. So I'll have to sort of see how this one sort of plays out through the session. But certainly, I think once we do sort of, get any sort of rally attempt and get through this area, I'd probably want to sort of move this up over here as well and sort of say that really you'd want to take out, this is the level that we're looking at over the weekend, 31.80, that's definitely a level to get out. But the fact that it's come down further, you can also use a little bit of a confirmation line a little bit earlier. So if we do break out of this little falling resistance, this could be an area horizontally where we've seen the sellers to give them another shot to sort of push it back down, and that could be your potential move. If as to this sort of happening here, the fact that we're below this level here as well, if we sort of, as you can see, that could potentially be your little support area on a pushback to see if the people if getting out of this channel would sort of get them to being buyers again with it all. but very much in sell mode at the moment. This is just a sort of if you are going to see a recovery with silver, this is kind of the setup you want to see with it all. I think there's a very high likelihood that we just get another meltdown back to 29.90 or so. Flip across, we've got Aussie, and Aussie trying to hold this bottom down here to make it for an actual sort of a higher low. It did rally up sort of early yesterday, but of course with DXY strength and that, it just succumbed. Held up actually a bit better than a couple of these other trades though. Get onto a lower time frame, you can see this a bit. So it has held okay, but as you can see, come this morning, even with sort of business confidence up, that has not really sort of had any sort of impact for it here. A little bit of a short term, like if we just call this its little range here now, a little bit of a break, retest. So now we can sort of say that above 80, you can target 94, 95 in the 90s, above there, recovery. Downside, below 55, 57, I think that opens it up to really sort of coming down here to tackle these lows, 55.16. So I think this is kind of the direction where you're going to get out of this boxer here at the moment. We're either going to come down here like this, or I move out this way, or just in a little interplay like this and on with the range. So yeah, look, I think the lines are pretty much drawn with that. We just got to see what DXY does. If DXY, as I said, if that decides to sort of just do a small little pullback and then just go, this is most likely what you're going to see. Shorts coming out the bottom side here. If we do see a little bit of reprieve, you may sort of see just a continuation of this little channel through here. But certainly above 66 is where you'd sort of say, okay, look, we could probably see a little bit more of a sustained recovery back up to retesting, mid 66s at least. The recovery from the election was incredible. This was a 127, I think. Retracement. I don't have it marked on this one. 127. As you can see, right up 1.27, clipped it, came into this area and smacked back down. A lot of Aussie weakness is really sort of coming due to China at the moment. China just can't get out of its own way. We're seeing the yen, the yuan, get absolutely ripped. That at the same time that you're seeing US dollar pick up, we're seeing copper break some key levels. All these things are really sort of, they're adding to the sort of the pressure on Aussie, but it's not breaking it at this stage. So as long as it can sort of maintain with all these things working against it, think about it. If you've got one, two, three factors, you've got stronger US dollar, you've got weaker yuan, which all these things flow on, and a weaker copper. They're the three sort of things, or three of the things that Aussie move off, and they're holding it down at the moment, but they're not breaking it. So if we see a cool off in US dollar, if we see a recovery in copper, if we see the yuan sort of strengthen back up a little bit or just rebalance a little bit, those factors that are holding Aussie down will then get it to push back up a little bit. So while those three factors are happening, it's holding it in place. Because this is one thing I've noticed with the Aussie as well. The correlations are a little bit off. Like Aussie is typically, it's called a risk asset kind of thing. So risk on will move it. The market is in extreme risk on mode if you look at certain segments of it, because you've got Bitcoin going through the roof. That's a very much a risk on asset. Equity markets are at all-time highs, yet Aussie is not moving. So the downside of this is that if US dollar strength doesn't line up, if one remains to be weak, if copper breaks and pulls right back even further, and then if you add equity markets coming off the tops on that, then that's adding another weight. And maybe the equity markets coming off the top is enough to sort of break it to come down a bit lower. But while equity markets are moving up, it's keeping it buoyant. It's not moving up further. It's keeping it, sorry. So equity, so like this. Equity markets are keeping it here. Copper, US dollar, and yuan are keeping it here. So either you get rid of these three here, which are holding it up, which is the equity markets. These ones are just going to go bang down like this. And it's just going to flow and push down even further. But the flip side of that is that we see US dollar, the factors that are holding it down in place. So US dollar and weekly yuan and copper recovers. Well, equity markets, not so much Bitcoin, but those other things, they flip to this side and they push it, and that'll give you this move back up here. So really, it's in a bit of a hold mode at the moment. We just have to sort of see who relents first. Is it going to be the equity markets come off, or is it going to be US dollar come off? Thing to keep in mind is that Trump does want a weaker dollar. If you look at I saw a good chart the other day that if you, actually, let me see if I can find it. One sec. All right, so this is it here. It's just a photo I took of a screenshot actually. But as you can see, very much sort of like through these Republican leaders, dollar has weakened. Democrats up, Republicans down, Trump more or less flat. But if this is where they kind of came in, this is where they came out, boom, down. So Trump wants a weaker US dollar. Something to keep in the back of the mind. And this is like a much larger sort of macro idea. It's not a sort of something that you're going to trade intraday for this. But the thing is, it's sort of like, moving forward, particularly 2025, that's an idea that he wants to have. So, you know what I mean? That's not going to help us in this immediate, but it's something to keep in mind in the backside. So really, at the moment, we're going to see who's going to crack first. If equities crack first, we move down. If US dollar pulls back more significantly, we're going to see the move back up to the top side. But in terms of the actual trading through the session, above 80, look at 90s, below 60, I would say we're probably moving back down to 65, 16 kind of area. All right, where we at? Speaking of copper. So this is what I was saying through yesterday. So we've actually just noticed this now. Just update the chart a little bit. We've got a baseline here. This is our line in the sand. You break through here, I would say that this little rising support, well, actually, it's probably this rising support's done now anyway. Let me just update him a little bit. Yeah. You'd want to have to sort of hold this here. I think if you go down underneath 2586, we're going to see a little bit more of a sort of pullback, and this is going to sort of come down a little bit further. The fact that it closed on that level yesterday, on Friday, underneath this, if we jump onto the 4-hour, this is what I was saying. This is the level that you would have wanted to hold, because you can see they were happy to buy, happy to buy it, happy to buy it, happy to buy it. A little bit of an overshoot. You really wanted to recapture and make sure that the buyers were still keen at this area. They obviously weren't, and bang, that is the result. So this is where the buyers are sitting at the moment. Do we see some rebalancing, as I've said with all these other bits and pieces? I think if you get back up, any sort of move back up here is really going to be sold into at the moment. You need to reclaim 435 to look halfway decent. At the moment, I think there's a good chance that either we continue down, or at best, we bounce in this kind of area through here. I feel that this is potentially blown out now. Let's get these out so we can work on what we've got at the moment. So yes, if we look at this, we've got potentially any move up to 435, I imagine, to be sold into. Line in the sand is at 426. Underneath sort of 426, I would say we're moving down to these lower levels, possibly back down to, if I was to call one, I would say back around 416 for the next move down. It has been absolutely just flying around. So we'll see how we sort of go. Any sort of move above 429, I reckon could give you a little bit of reprieve. Turn around Tuesday, see what happens. And we've got finally the one, as I said here. Look, this break is like, as you can see, this is a good idea where you've got that sellers all through here, broke through the sellers, and then flipped around on the level, they became the buyers. This is your level down here. Came back up, targeted, thought we might have got that little double top, but again, last couple of hours, so I think where did we start? This is Monday. So this is why I say the last couple of hours don't really matter sort of coming into the week, because that's what we didn't know. This is how the week finished. That was the last candle. But if you ignore or delete that last candle, very bullish up into resistance. So you had a little bit of pull down and then recharge, bang, moved up through here. So at the moment, what you're sort of potentially looking, we've got a little bit of a resistance coming in here. So what we'd be looking for is a pullback to retest these levels, the previous highs where we've seen over here, and then to see if we have further of a continuation. Measured move, excuse me, is back up at 426 for the one. So a little bit of a pullback, very similar to DXY as we sort of showed earlier. That potentially you see a little bit of a cooling. It's a little bit overbought here. Turn around Tuesday, see it come back down here, retest these levels. If these hold for support, you push back up. Second level potentially would be down to here and then back up through here. But same sort of thing. If you look at this, actually put them side by side. With DXY, this is the same kind of setup we're looking for here. A little bit of a sort of resistance, a little bit of a pullback potential, and then recharge to go through here. So look for where this really bounces. Same with the one here, because that'll determine how big our next sort of leg and how strong it is. The sooner the buyers step in, shows how hungry they are, and they're not letting anybody get off, and they're just going to drive it up even higher or quicker, kind of thing. All right, so having a look forward, that was about it for data through Asia. Asia has been super quiet recently for data and that coming out. We got US, US UK data coming later today. Slight tick up in employment. Not really anything's going to move any of the markets for trading, and there's not really a great deal going on through the rest of it all. Kind of low tier inflation expectations. A couple of speakers. No, not really much till CPI again. This is what I'll say over the weekend. This is the one that you're looking at here, and I think anything 2.4 or above, I think even if this comes in even here, like flat, is going to be somewhat bullish for US dollar, because of course, like with the fight of inflation and all this kind of stuff, the argument for more cuts is that inflation isn't a problem because it's moving down. If you see that halt, if you take that sort of factor out of it, and hold on, wait, it's not dropping and it's not slowing down, and in fact, it's actually ticking up, they're not necessarily they're not going to hike rates, but they may slow the rate in which they're cutting, which basically translates to them potentially holding in their next meeting. And if they hold in the next meeting, that's a hawkish. So it'll be a hawkish hold to sort of test the waters with it all. And that's another thing that'll add to US dollar strength. So one to watch out for. All right, that's it from me.